Welcome to today's episode. My name is Shiraz Wahid, and we are going to today discuss everything about crypto taxation in UK. We are joined by our guest Jamie Nuttall today, who is going to give us some answers. Jamie, can you please give a brief introduction about yourself?
Sure thing. Thank you so much for having me on, Shiraz. My name is Jamie Nuttall, and I'm the head of crypto tax for Minor, one of the leading accountancy firms in the UK. I'm a fellow member of the ACCA and a crypto degen, shall we say.
Well, thank you for joining us today, Jamie.
No problem, no problem. My pleasure. I'm looking forward to getting stuck in and answering some questions.
Yeah, so let's get right into it. And my first question would be that can you explain some basic principles of how cryptocurrency transactions are taxed in the UK?
Yeah, absolutely. With crypto taxation in the UK, it tends to fall under one of two streams, one or two regimes, shall I say. It's either capital gains tax or it is income tax regime. Now, usually speaking, it will be under the capital gains tax regime. Some will fall into the income tax regime. The most notorious and common ones are staking, mining, airdrops in certain situations, amongst a few others that are less rare.
Yeah. So, can you dive deeper into these principles of, if someone is a cryptocurrency investor or trader,
Yeah.
how does he goes about, dealing with the HMRC when it comes to taxation of these, as you said, the capital gains tax of things or the income side of things?
Yeah, so once you get your head around the two different regimes and understand the very fundamentals and basics of it all, you then need to dive into your portfolio and figure out which has is under which regime. Now, some situations you might find yourself completely in one or the other for certain asset classes and types, but usually speaking, you'll have a bit of a mixture of both. For example, if you are staking your Ethereum, you might find yourself in a situation where there is a disposal of Ethereum because you lose beneficial ownership. So that means there's capital gains tax when you enter the protocol. And then when you receive the staking rewards, you would actually then get it'll be income tax on the staked assets itself. So you've got both capital gains and then income tax. And then when you sell those assets that you initially received under a staking, any increase or decrease in value compared to the market value at the point of receipt will be subject to capital gains tax. So that's a very common thing to see. And we do see a flick between the two. Now, you touched upon something very interesting there, Shiraz, about how an individual could be deemed as a trader. And what this means is the entire portfolio goes from a capital gains regime to an income tax regime. So even when the value of the assets go up and you sell it over time, that can be under the income tax regime. Now, that can only happen if you are considered a trader. So, how do we deal with that? I would personally look at something called the badges of trade. So, my governing body, the ACCA, have released several fantastic articles about it. I would recommend anyone look it up. ACCA badges of trade. It'll give you a series of 9 questions where it determines whether something is to be a trade or not. Now, just as a note here, Shiraz, which is very common, people tend to think it is solely based on the level of transactions and how often you transact, whether you become a day trader. Although that is a factor, it is only 1/9 of the question. And the severity of the answer is kind of irrelevant. So if you have 10,000 transactions a year, which is quite a lot, I would say, for the space, or you have 1 million, either way, you're only answering one question as yes. You still have another 8 criteria to meet in order to become a trader. So something just for your viewers to pay attention to, especially in the UK.
Now, I also want you to touch upon a bit more on the concept of disposal of cryptocurrencies. So, from an HMRC perspective, what defines as a disposal of cryptocurrencies, and like, what are some common examples that might trigger a taxable event when in regards to the cryptocurrency disposals?
Yeah, it's a really good question as well, actually. So, according to HMRC's manual, and I'll read it out now, is BIM 60835. So, this is just talks about the definition of a disposal. It says here, according to HMRC, a disposal is any case where the property is effectively disposed of either in whole or part by one or more transactions or arrangements. So, in a straightforward sale, this will likely be the date of completion. So, I know this is talking about properties itself, rather than general assets, but it gives you an idea and a flavor of what they're talking about disposal. So part disposal, basically whenever you lose beneficial ownership of an asset. Okay, so a disposal can be a sale. Most people know that. A disposal can also be a gift. Not many people know that, because you are still losing beneficial ownership. So Shiraz, if I give you one Bitcoin, I can't, but if I did, that would be a disposal on me to you. You would be the new beneficial ownership of said Bitcoin. So a gift counts. What also counts is a trade. So if I swapped Ethereum for Bitcoin again, that's a disposal of Ethereum to acquire Bitcoin. Still a disposal. So that's a trade, that's a sell, that's a gift, that's a swap, anything where the amount of asset, so Ethereum, the amount that you own goes down from 10 to 9 or 10 to 0, 10 to 1, that's a disposal. So that a good indicator is figuring out how many you had, then how many you now have. Therefore, if it goes down, it's probably a disposal. The only the only exception there would be for rebasing tokens. That's a little bit trickier because that rebases every second and changes the quantity. So you have to be very careful with that, because that doesn't quite fit because of the way it works and the mechanisms of that particular asset. So yeah, that's a disposal in terms of how HMRC kind of put it forward, but more importantly, how we perceive it. I don't think there's anything that's going to catch you out apart from that. No, just remember there's a lot of disposal situations. It is not only when you go to fiat, it is whenever you swap, gift, trade, or sell.
Thank you, Jamie. That was a good clarification. My next question is about record keeping requirements. So, from an HMRC perspective, is there any specific type of accounting or record keeping that you need to do in order to, proof of your whatever the tax filings that you have done for your cryptocurrency taxation?
Absolutely. There's a fair few ways. The first one where I would start anyway would be to grab all CSV files of your portfolio. Now, you might think, okay, well, we don't always use CSV files, Jamie. We use API keys, for example, for our bookkeeping. Not a problem. The reason why I say CSV files specifically for the UK is because if HMRC ever want to check your calculations, they would tend to ask for the CSV files regardless. Okay, so that's what reason number one. Reason number two: CSV files and API keys. You probably need both for your bookkeeping and to start actually dealing with your to try and start dealing with your crypto taxes. The reason for that is those two don't tend to line up for some reason. They should, they don't. Then once you've got those, we would then look at software. Always use software. And I know your question was more around bookkeeping. However, I think the software is pinnacle when it comes to bookkeeping. It will save you an absolute fortune in time, and it's relatively inexpensive depending on which software you go for and why. So those would be my first two tips. So CSV files, whether you use them or not, get them. Get some decent and appropriate software. Some are better for NFTs, some are better for arbitrage trading, some are better for the really weird exchanges you may use. And then the third one is, if you are struggling, ask for help. Now, the help can be in the form of these podcasts, Shiraz. You're doing an excellent job getting some education out to the community. Wonderful stuff. A help could be asking someone that's been through it, that's submitted their taxes. And lastly, help genuinely, and this is the ultimate help, you can't really get much better than this, hire someone like myself, someone who knows about crypto and accounting. Now, many accountants will know about crypto a little bit. So again, it depends on the severity and complexities of your situation. They might be okay. But if you're dealing with nodes, rebasing tokens, maybe you've got an NFT project, maybe you've just got NFTs on the Cardano blockchain, that's going to take a very particular set of skills and knowledge that, honestly speaking, I think my firm Minor, maybe another one or two might be able to help, but not many others would. So just to recap, CSV files regardless, software most definitely. Not sure why we've got a thumbs up on the screen. And then lastly, seek help, whether it's from podcasts or general marketing, educational material, friends who've gone through it, or accountants.
Well, thank you for the response, Jimmy.
No problem at all. My pleasure.
So, Jimmy, I know we already touched on this question, but like, can you expand on the idea of what is the difference between capital gains tax and income tax regarding cryptocurrency earnings, and how one can determine like which one is applicable to them for their tax year?
Absolutely. So for most people, there'll be a set situation where you would be under the income tax regime. For starters, if you're considered a trader, which we spoke about. The other thing is certain things are always going to be under miscellaneous income, which is under the income tax regime, but no national insurance. So that would be staking, rewards, airdrops, mining, and that type of thing. Now, to dive into it further, why is this important? I guess many people are asking. Well, there's two different tax rates, and they vary quite significantly. For example, the first bracket, if you like, is called the basic rate band. For capital gains tax, it is 10%. Okay. For income tax, it is 20, and it could be national insurance as well, depending if it's miscellaneous income or not. The next bracket, which is called the higher rate bracket, for income tax, it's actually 40%, but for capital gains, it is 20%. So you can see there's it's double. It's a huge difference between the two. For income tax, there's actually another step above that called the additional rate bracket, which is 45%. For capital gains, there is no other bracket above 20%. So if you had £1 million, let's say you made £1 million in the crypto space, if it was under the capital gains tax bracket, the maximum level you would pay is 20%. Whereas on the income tax regime, the maximum level will be 45%. So a huge difference there. Absolutely massive. So it's very important to make sure you get it in the right regime, because you could either be paying too much tax, which nobody wants. Nobody wants to pay more tax than they need to. And I see that a lot because people go, oh, let me just pay more just in case because I don't really know. It's like, well, come to us. We'll save you that money or we'll confirm it's correct. And the other option is that you pay too little tax and therefore you're underpaying taxes. And that's when all penalties and all sorts, HMRC will come after you and say you've done it wrong. And yes, if it's an accident, it's normally okay, but let's just be very careful about that as well. So, yeah, it's important to make sure you know the difference between the two and where you fall within it. Most of these softwares will mostly guide you towards the right direction, which is fantastic. It depends which software you use, which jurisdiction you're in, but in the UK, yeah, most of them do a pretty good job from a starting basis anyway.
Thank you, Jamie. My next question is about gifts regarding cryptocurrency. So, if someone is gifting a cryptocurrency to a family member or a spouse, how does the HMRC treats it from a tax perspective?
Yes, now this is a very overlooked question. People assume gifts are tax free. They are not. It is a disposal. So when you are gifting something, it is a disposal. Therefore, you are going to create a gain or a loss. There's a few exceptions, mind you. Okay. So the general gift to family members or friends is taxed, I'm afraid. You might even create a loss. So if you bought something for £10,000, let's say I bought Bitcoin for £70,000, for example, Shiraz, and then it comes down to £20,000, and I say, Shiraz, you're a good friend of mine, mate. I want to give you this Bitcoin. Here, please enjoy. Um, I've created a £50,000 loss there, haven't I?
Yep.
So if it happened the other way around, I bought it for 20, it went up to 70 at the market value, and then I gave it to you, I'll create a £50,000 gain. Now, the exceptions are with a spouse or civil partnership in the UK, at the very least, anyway, you can pass it across to your spouse for tax free. So, let's say I were to give my wife a Bitcoin in the same situation. If it was worth 20,000 when I bought it, and then I gave it to her when it's worth 70,000, the base cost of 20,000 would pass to her. There would be no tax implications whatsoever. That's just how it works. Okay. The other exception is if well, there's not really an exception, I guess, but I just want to touch upon inheritance tax as well. Now, I am not an inheritance tax expert, but you must remember that there will be inheritance tax implications. Okay, it can be deemed as a potential exempt transfer, where you give away assets, especially crypto. What this means is if you were to pass away within 7 years of giving the asset, it may come back into your estate and be taxed under the inheritance tax regime upon your death. Okay. So be very careful of that, especially if you think you are ill or you're not going to survive 7 years. Definitely seek professional advice around inheritance tax for that because it gets quite complicated. If you survive 7 years, then you're outside of that scope of a potential exempt transfer within inheritance tax rules. But I don't want to go into that too much. Just be aware of it. So there's lots going on there. So gifts are not tax free in the most cases.
Thank you, Jamie. And now my next question is about the conversion of cryptocurrency. So let's say if someone converts from Bitcoin to Ethereum or converts it back, what are the implications as far as the taxation is concerned?
Yeah, so there's two implications there. The first one is where you create this disposal. So when you go from Ethereum to Bitcoin and vice versa, it's a disposal. What that means is you're creating a taxable event, as we discussed earlier on, and therefore there's going to be a loss or a gain, or maybe in a very unlikely situation, they're exactly the same. But there's going to be a loss or a gain in this situation. Now, what most people miss is in the UK, there's requirement or guidance at least to report if your proceeds are above £50,000. Okay, so what that means is if I sold a house for over £50,000, even if I made a loss, I still have to report it to HMRC. Okay, or if I have a some form of some shares or something, and I sell so many that it ends up being £50,000, even though I bought it for 100,000, I only sold it for 50,000 because it's breached that threshold. I need to tell HMRC now with the disposals. Every disposal creates some form of proceeds. So with most people think, it goes to fiat, that's when I need to pay attention. Correct, but you also need to pay attention with Bitcoin to Ethereum and vice versa, because those disposals still creates a proceed, which is a contributing factor to this threshold. And I know this is starting to get very technical now, I get it. But if you look up proceeds, what it is, that's fine. And then if you look up the proceeds threshold, which is £50,000, if you breach that, you have a requirement to pay. Now, it is very easily done in the crypto space to the point where a lot of my clients will have millions and millions of disposals, and yet their gain might be £5,000, and they say, Jamie, I've never seen £1 million before. How can my proceeds be that high? And the way I explain it's like this: let's say I have £5,000 worth of Bitcoin, and Shiraz, you have £5,000 worth of Ethereum. We swap. What that means is my proceeds for that is £5,000, but my disposals would be £5,000. So 5,000 proceeds, 5,000 cost, zero balanced net total there. So there's no tax. If we did that 10 times, Shiraz, that means my proceeds would be 50,000, my cost would be 50,000, then there's no tax. But I need to tell HMRC about all of that now. And that's 10 transactions with an average cost of £5,000.
And
Very
then it sums up to 50,000 in proceeds, and then that creates an event that needs to be reported to the HMRC. Yeah.
Absolutely, 100%. And I think a lot of people are going to get caught out about this and they just don't know. They just don't realize it. People didn't realize it before crypto was a big thing, let alone now. So, yeah, be very wary of that, I would say.
Yeah. Thank you. So, Jimmy, for the next question, let's say if there are losses in cryptocurrency investments, okay, can they be used to offset other type of income or gains in a tax year?
At the moment, yes. So, what this means is if you have a property that you've sold in the same tax year or a tax year after, um, and you've got a load of losses, you can offset that against that property gain. Shares, anything within the capital gains regime, you can offset it against that. If it's miscellaneous income losses, I don't think there'll ever be a situation that can happen. So don't worry about that. It's very rare. If it's a trade and you make losses, that can be set sideways against other income. You can carry it back as well against a previous tax year, and you can carry it forwards. Okay, so you absolutely can. With capital, you can only use it in the current tax year against other gains or carry it forward. You cannot carry it backwards. So so the losses can be used against other things. It's just subject to the usual rules. I do suspect that they may start what we call ring fencing, where you kind of only allow it against other similar assets. So be ready and wary for that. I don't know if and when they would do that, but it would surprise me. So if you have losses, use them.
Yeah. And my next question is about cryptocurrency mining. So, if someone is doing cryptocurrency mining based in the UK, what should be the tax considerations for them?
Yeah, so for anyone who is mining, it's going to be considered miscellaneous income. So that means you're under the income tax regime at 20%, 40%, and 45%, but no national insurance on mining. Now, depending on how much you do and according to the badges of trade, you might end up paying national insurance as well. But I would test that if you believe that you are more into a trader. But if not, it's just going to be 20%, 40%, 45% miscellaneous income tax.
Sure. And what about NFTs? So they're not purely cryptocurrencies. It's another form of asset class closely related to the cryptocurrency. So if someone is dealing in NFTs, or he's holding NFTs, is there any special tax considerations or treatments that needs to be taken care of for NFTs?
So NFTs are taxed in the same way, basically. So you've got your capital gains tax regime. Now, if you are a project owner, that is a business, that would actually then be under the income tax regime. So that's fairly standard and straightforward. There is a slight difference with NFTs and crypto in how they are, in how it's calculated to tax them. So with general crypto, there's something called Section 104 pooling, or the bed and breakfast rules, as most people know about it. So what that means is everything that you do on the same asset class, so Ethereum, Bitcoin, Cardano, whatever it might be, is all grouped within one day. And then after that is grouped within 30 days, and then it's everything else. Okay. So what that means is, if I buy one Bitcoin for £50,000, and then a day later I buy another Bitcoin for £25,000, and then the next day I buy, next month or whatever, I buy two Bitcoin for £25,000. Okay, so we've got four Bitcoin altogether, and they cost all sorts of different values. What this pooling mechanism does is it says you take all of them and then you divide it by the total cost. So the cost basis for all four of these would be an average of £25,000, according to that quick maths and sort of scenario. This is because crypto is what is known as fungible. Okay, so your Bitcoin and my Bitcoin exactly the same. You know, now I know technically speaking, people now Satoshi hunting and looking for rare sats, and I get it. So technically not, but for tax purposes, everything is the same. We can put it in the pot, mix it around. We won't know which proportion was yours and mine, etc. Now with non-fungible tokens, NFTs, okay, non-fungible. What that means is you can't mix your NFT with my NFT. Let's say we have an NFT project that is like Top Trumps, okay? So we have, I don't know, Mbappe football card, let's say. So you have one, I have one. The picture's the same, the utility is the same, the stats are the same, everything is identical. But if we put them into a pot with five others identical, mix them around and tear them apart, so we return them to a random owner, we can tell the difference because of the hash reference. Okay. So what that means is there's none of this mixing and getting an average cost with all that anymore. It's just that is one NFT. You buy it for that amount, you sell it for that amount. That is it. There's no worry outside of that. And one thing also I would like to note between the differences, which is very, very important, is if I were to sell Bitcoin at a loss for £50,000 and then within 30 days buy it back for the same price that I sold it for, that will negate the loss because of this pooling mechanism. With NFTs, you might not be subject to that pooling mechanism, which means if you have bought, and this is great tax planning, by the way, if you have bought an NFT, let's say you bought a Mutant Ape, for example, at the height of £50,000, and right now it's worth 10,000. If you sold it, crystallizing a £40,000 loss, and then bought it back straight away for £10,000, the new base cost will be £10,000, and you can actually crystallize that loss. So what I see a lot of people do is they start selling their apes and then buying a new one back at a lower cost, crystallizing a loss. So very important there. If you guys want to talk more about that, please hit me up. It gets quite complicated, but some fantastic tax planning for NFTs.
Makes sense. Makes sense. So my next question would be on, like, what are the common mistakes that you see that cryptocurrency investors or traders they make when it comes to their taxes, and how that can be avoided. So, for example, like especially for beginners, I get this question that, okay, like all of my crypto assets are, in a decentralized wallet or a wallet that cannot be traced, and that's how I'm doing my trading and whatever investing and stuff is happening. So since the HMRC does not knows about it, I have, what if I don't report it, and kind of we leave it there. So I want you to touch upon this particular aspect, but in general, what are the common mistakes that you see for cryptocurrency for from a taxation perspective? Yeah.
So for that particular case where people believe that HMRC just won't know, let's break that down for a second, okay? We know that all of our activities on the blockchain, which is an immutable ledger. It can never be changed. It can never historically be changed anyway. It can never be hacked. Bitcoin hasn't been hacked, apparently, but we'll see. What that means is there's a public ledger of all your transactions that everyone else is out there right now. All anyone needs to know is who owns what wallet. Now, with KYC being a lot more prominent, you're going to be KYC to at least one wallet or another, especially in the UK. If you want an on ramp or off ramp in particular, you're almost going to have to. So there's going to be a wallet with your credentials attached to it, and you're probably going to have lots of interactions with your other wallets as well, which will come into it. Which means that all it needs is a bit of AI and tech, which already exists, in order to capitulate the entire picture
Hmm.
and get you in a position where they know before you even know. So number one is obviously not paying your taxes when they're due is just illegal. Don't do that. Like, just don't do it. Like, if you want to talk about it, I'm open to talk about it, but just don't do it. And by talk about it, I mean, if you have what worries or wonders about it, I'm open. Let's have an open discussion by all means. 100%. I'll just give you hard, raw facts. The other part is the tech is already there. HMRC may or may not have it. I don't think it's a case of if they will catch you. It's a case of when. And that's a scary thought for anyone that hasn't adhered to the tax laws thus far. So I would highly recommend anyone to really have a look at it and genuinely guarantee that they don't need anything to be submitted, especially with that proceeds figure we spoke about earlier on, Shiraz. That's very important and very easily done. In terms of other general mistakes that people make, let's talk about the fact that they don't use software. Now, although it's not a mistake, it can create a lot of unnecessary mistakes, especially with the bed and breakfast 30-day rules. Not many people can calculate that manually. So you probably need software, mostly affordable. Another mistake is thinking that you could just bury your head in the sands because it's horrible and difficult and hard and expensive. I have so many clients that once it's done, they go, "Oh, so that's half the amount I thought I'd have to pay." Yeah, it is. Like, it's not as bad. And they go, "Oh, Jamie, you're magic. You're wonderful." It's like, no, mate. I thank you so much, but this is just facts. This is not us being, funny or anything. This is just the data, and it's just better than you thought. So don't think it's all doom and gloom. It might be, but it might not. Either way, get it sorted. So that's another mistake I see people make. The most common mistake that I see both investors, those who report their taxes, and accountants make is airdrops, Shiraz. Airdrops. The last time I spoke about this particular point was an hour and a half ago, well, about nearly 2 hours ago now, where airdrops are taxed in a very particular way. So there's actually three potentials. The first one is it an airdrop? Like, really think about it, because you might consider an airdrop, but it might be more like a cashback type thing. Like you get your supermarket cashback. What that means is it's tax free. Don't worry about it. It's tax free until you sell it. Okay. The other two options are, one is it's still tax free because you did not do anything significant to receive it. So although it's worth 100,000 when you receive it, it's tax free until you sell it, and the gain or loss on that would be taxable. The final option is you were hunting for it, you completed surveys, maybe you joined a podcast as a guest to get an airdrop from Shiraz. Like that would be doing something. So that means it would be taxed under income tax upon receipt, and then it will be capital gains tax when you do sell it if there's an increase in value, and if there's a decrease there would be a loss. So airdrops, they're not complicated, but they catch a lot of people out. So that's probably the biggest common mistake I see people make. The next one is the lack of data. A lot of people assume API keys and CSV files are exactly the same because they should be. They're not. So you might be missing data from one or the other. So if you're using software and you upload API keys, for example, and there seems to be something that's not quite right, check it against the CSV file and plug in the gaps, and you should be on your way. And I understand I've basically given everyone all the answers here, Shiraz, which is fine. More than happy to. But there's a lot there, and it's just the tip of the iceberg.
Okay, so Jamie, my next question is around the HMRC filing requirements and deadlines. What goes around it? Like how do you deal with that? Like especially from a cryptocurrency perspective, you know, when should you report it? How should you report it? What are the filing and the reporting requirements for this? Yeah.
Yeah, good question. Really good question. It's very basic, but I think everyone needs to know this 100%. So, in terms of requirements from a crypto perspective, there's two. The one we've already spoken about, which is the proceeds level. If your proceeds are above £50,000 from a capital perspective, then you have a requirement to report it. It's a very weak requirement, but it's a requirement nonetheless. It's a common one most people will miss. The second requirement is an obvious one. If you have tax to pay, if you've got tax to pay, you're going to have to report it. And the same for miscellaneous income as well. Now, there is a tax-free amount for capital gains tax and miscellaneous income. So miscellaneous income, you actually get £1,000 tax-free. So the first £1,000 that you make in your staking, for example, but it's got to be staking and your mining and your airdrops, all of that will be tax-free. The first £1,000, fantastic. In terms of the capital gains, the first, at the moment, £3,000 is tax-free per person. Last year was six. And then the year before that, and something like 10 years before that, was 12,300. So the tax-free amounts are getting lower and lower. So those are your requirements, your basic requirements that everyone needs to know. In terms of the deadlines, so the tax year end is the 5th of April, whatever year it is you're talking about. So this one would be, that's just gone, would be 5th of April 2024. So that takes into consideration from the 6th of April 23 all the way through to the 5th of April 2024. And then you have until the following January, about 9 months, to report it. So you've got loads of time to report it. And the deadline to pay is the same date, the end of January the following year. So that'll be 31st of January 2025 in this particular scenario. So if you understand those concepts, you should know when you need to pay. You should know why you need to pay. You should know the different regimes and tax-free elements, as well as when you need to start to report as well. And if you're not sure, get an accountant.
And like, what could be like potential penalties for non-compliance of all these things that you have just mentioned?
Yes, so if you do not submit a tax return that needs to be submitted, regardless of whether there's tax liabilities or not, there'll be late filing penalties. We start at £100 for being first 3 months late, and then it goes up to £10 a day, and then you've got another penalty after 90 days of something like £300. So the whole year costs about £1,200 penalty. It can be higher if you've got a liability. There's also, on top of that, a late payment penalty or interest. So anything that you don't pay on time, and you can't pay on time if you don't submit, because then you don't know how much you're paying, that is subject to, I think, 2.5% above base rate in the UK in terms of the interest, which HMRC will charge, which will go on for as long as until you actually pay it as well. So these penalties can get quite hefty. I would always recommend getting your things in on time, but if you can't, maybe put in a provisional tax return with rough estimates and pay what you think you owe to mitigate a lot of those penalties. So you won't get late filing because you've got a provisional tax return, and late interest would only be subject to anything that you've underpaid by. So, for example, you think your liability is £10,000 and you pay £10,000, transpires is actually £12,000. So the interest wouldn't be on 12,000; it'll be on the 2,000, just the difference that you didn't pay. So it saves you an absolute fortune. That's obviously a backup if you really can't get it in on time. If you're listening now and you're in the UK, it's the 15th of May when we're recording it right now. So hopefully this goes out soon. We have ample time right now. But before we know it, it'll blink and it'll be October. And that is when it's too late. August is the absolute latest you want to start thinking about it, the absolute latest. And we all know how fast August will come round.
Okay, thank you. And Jimmy, if someone who would like to work with you or get your advice on these taxation matters from cryptocurrency, how can they reach out?
Yeah, so there's a few ways, and hopefully by then this cold will have gone. So apologies for my tone today, guys. There's a few ways. The first way is to get in contact via our website. So that's mineraccountants.co, not .com, not .co.uk, .co. The other way is to email me at jamie@mineraccountants.co again. So minor accountants. Another way would be through X, or previously known as Twitter. My at is CryptoTaxJME. The app for the business is at Minor Accountants. So either way, you can find us there. General Google searches will work as well, and I'm sure if they get hold of you, Shiraz, you can point them in the right direction. So yeah, that's how they get hold of us. And yeah, thank you so much for having me, Shiraz. Really, really enjoyed it. Lots of quality questions, and I hope those who listen will really get something out of it.
Sure, sure. Thank you, Jamie, for your time as well. Very quality answers as well. I will link down your contact details in the description below for anyone who wants to get in touch. And I also encourage the viewers to put any of the questions that came up in your specific situation. You can put them all in the comments below. And then once we have a good amount of questions piled up, we will nudge Jamie again to come back on the show and then clear those out as well.
More than happy to. More than happy to.
Thank you, Jamie, for your time today.